Welcome to our analysis of one of the most dramatic strategic shifts in corporate history. The title says it all. Tesla pivots to robotics as EV sales plummet. Tesla CEO Elon Musk has announced a dramatic strategic pivot away from electric vehicles toward humanoid robotics, positioning the company's Optimus humanoid robot as the cornerstone of its future growth. In Tesla's newly released Master Plan Part 4, Musk projects that 80% of the company's value will eventually derive from its Optimus humanoid robots, representing a fundamental shift for a company that built its reputation on electric cars. Key statistics. Let's examine the key numbers behind this strategic shift. Musk's ambitious vision targets transforming Tesla into a potential $25 trillion company by 2050, powered by mass production of Optimus robots priced between $20,000 and $30,000 each. This represents a striking departure from Tesla's original mission of accelerating sustainable transportation. Meanwhile, Tesla's core EV business faces significant challenges, with global EV deliveries dropping 13% in the first half of 2025 and U.S. market share falling to just 38% in August 2025, the lowest level since October 2017. Strategic pivot to robotics. Tesla's pivot to robotics represents a fundamental reimagining of the company's future. Rather than being primarily an automotive company, Tesla is now positioning itself as a robotics and artificial intelligence company that happens to make cars. The Optimus humanoid robot is now positioned as the cornerstone of Tesla's future growth, with projections that these robots will eventually account for 80% of the company's value. This shift comes as Tesla faces increasing competition in the EV space, particularly from Chinese manufacturers like BYD, who are capturing market share globally. Production challenges. Despite Musk's bold projections, Tesla's Optimus program faces significant technical and production hurdles. The company had built approximately 1,000 prototype units by mid-2025, but paused production for major redesigns after engineers encountered critical challenges. These challenges include battery life issues, low payload capacity, and overheating in joint motors. Production was halted in June following the departure of Milan Kovacs, the program's original head, with responsibilities transferred to AI director Ashok Eluswamy. The redesign process has made Tesla's original target of producing 5,000 to 10,000 Optimus units in 2025 increasingly unlikely. EV business struggles. The robotics pivot comes as Tesla's core EV business faces mounting pressure. Global EV deliveries dropped 13% in the first half of 2025, with a 40% decline in European sales and a 5% decrease in China as Chinese automakers, led by BYD, capture market share. Tesla stock has reflected these challenges, declining 2.76% year-to-date before recovering approximately 8.21% following the Master Plan Part 4 announcement. The company faces multiple headwinds, including expiring EV tax credits, slowing consumer demand, and intensifying competition from Chinese manufacturers. Market opportunity and challenges. The robotics market presents a substantial opportunity, with industry projections reaching $218 billion by 2030 at a 14% compound annual growth rate. Morgan Stanley analysts estimate the humanoid robot market could reach $5 trillion by 2050, representing a massive potential market for Tesla. However, investor skepticism remains high. Some analysts argue Tesla's stock is overvalued if purchased solely for its EV business, while others criticize the company for abandoning its sustainable transportation mission. With Tesla's 2025 earnings expected to decline nearly 30%, some question whether the robotics bet can justify the company's premium valuation. Conclusion and strategic implications. In conclusion, Tesla's pivot to robotics represents one of the most dramatic strategic shifts in corporate history. While the robotics market presents a substantial opportunity, Tesla faces significant technical hurdles and investor skepticism. The success of this unprecedented pivot will ultimately determine whether Tesla can transform from an automotive company into the robotics powerhouse Musk envisions. With Tesla's 2025 earnings expected to decline nearly 30%, the company must balance its EV challenges with its ambitious robotics vision. Tesla chair Denham Holm has defended the strategy, stating that only Musk can lead the company through its transition into artificial intelligence and robotics, though she acknowledged he may not remain in the CEO position indefinitely. The coming years will reveal whether this bold bet can transform Tesla from an automotive company into a robotics powerhouse.